About the markets and what you as investors should be doing going forward. We've got Ashwini Agarwal joining in right now from Demeter Advisors. Ashwini, hi, morning. Good to have you on the show as always. Ashwini, banks, that's where the big surprise has come. Very solid quarterly commentary coming in, other than a few odd, here and there, like an IndusInd perhaps. But that said, seems like it's going to be an excellent quarter for banks.
Yes, good morning. Thanks for having me here. I agree with you. I think, banks and financials as a space looks quite interesting because valuations are still reasonable, and the earnings environment looks pretty comforting because the credit costs continue to be benign. Liquidity has eased up quite a lot. So we are starting to see that feed through to the loan growth. And the consumer seems to be doing a little bit better than how she has done over the last 4 quarters. So you put all this together, and you probably have a couple of quarters of very good, earnings news coming from across the banks and the financials, in broader set of financials, including the NBFCs. While the ECL norms are a little tougher than one might have expected initially, I think the fact that they'll be phased out over the next 5 years or so, which is what the governor had said at the time of the credit policy, tells me that banks will have enough time to adapt to this change. And I think overall I agree with you. Banks and financials are looking poised to do quite well.
Where's your tilt or preference, Ashwini? This is Harsha. Where's your tilt or preference within banks, financials? Is it within the large cap banks, the smaller banks, or the PSUs? And within the financials, the larger NBFCs? Just give us a sense so that you get a perspective as to how you're thinking of this.
So, I'm thinking of it like a barbell approach. So, on one hand, you can have some of the larger PSUs or the larger private sector banks that have relatively not done so well because, when the industry environment has tailwind, everybody does well. So, you buy the underperformers among the large cap names. And then I would go down the curve and buy microfinance companies because I think the peak stress for microfinance is also behind us. We might have another quarter or so of cleanup, but I expect that the commentary that will accompany the Q2 earnings will be quite constructive. Some of those stocks may have also bottomed out and probably will give you very decent returns with a 12-month outlook. So, create a portfolio that has kind of two ends to it. On one end, you might not have that much of earnings risk. On the other hand, you might have still one quarter or maybe another quarter of earnings downside, but the commentary will increasingly look constructive. So that's how I would construct a portfolio among the financials with a 1-year outlook.
Ashwini, what's happening with IT? Do you think the worst is already baked into the stock prices, or is it just a tactical move that one typically sees that IT stocks run up ahead of the numbers and then only sell off on news?
I said, look, the earnings news will determine how these stocks do, but a lot of bad news is obviously baked in. I mean, we've seen a slew of pretty tough news for the sector for the last 2 or 3 months, including diverse commentary from the two leaders in terms of hiring, the H-1B visa issue, and so on and so forth. And of course, the fact that AI will probably require a lot of the large IT companies to change their business models. These are free cash flow generating machines, and while valuations are expensive relative to their own history, and I personally find the valuations still to be challenging. The fact that these stocks have underperformed and the fact that a lot of the bad news is priced in might provide some runway for outperformance in the very short term. And then we have to see how the earnings fare and what the commentary says. But the rally that we are seeing today is probably, ahead of the earnings, hoping that the long patch of underperformance is behind us. It's a hope trade as of now, but the earnings might confirm it to be the right call. Let's see how that plays out.
Where is hope, though, Ashwini, as we step into the earnings season? Where are you hopeful that you will see positive numbers? And banks, of course, we've already discussed, other than that.
Yeah. I think on the consumer side, especially discretionary consumption, we will see some positive news as well as positive commentary. I mean, one of the largest NBFCs told me the other day that the microfinance loan book shrank by about a lakh crores over the last 1 year. Add to that the fact that the banks had basically held back on giving unsecured personal loans. So you think about one part of the population that kind of lives off borrowed money, and they had access to no money or no credit for the last 1 year almost. So they resorted to gold loans, of course, but at the same time, my sense is that consumption suffered in a big way. With liquidity easing up, with microfinance coming back to the lending market, with the guardrails now largely in place and whatever cleanup had to be done has been done, my sense is that the consumer will come back. Now, this will obviously be aided by the GST cut, so it's very hard to separate how much of this is due to GST and how much of this is due to easier financing available. But a combination will lift the consumer sentiment, is my feeling. Now, whether it turns out to be a flash in the pan for 1 or 2 quarters and then we are back to again a humdrum existence, I don't know. My sense is that this could be slightly longer, but consumer discretionary is one place. The other thing is that energy transition and energy continues to be a very, very big theme. Um, Valuations are very punchy in many places, but there are some pockets where corrections are offering bottom-up ideas. So my sense is that this whole market, you can't really look at sectors so much, but you have to look at stocks where earnings trajectory is pretty decent, but stocks have underperformed, and that's where you need to go. Overall, broader market's not going anywhere, so it's very hard to pick sectors in such a market.
Point taken, Ashwini. Ashwini, in August when we spoke with you, you spoke about how a possible festive push in terms of consumption, and this was much before the GST cut was announced. You spoke about that as a hope trade. Talk to us about how that's playing out, because what will likely happen is, even though Q2 may be a slightly muted quarter from a numbers perspective, the commentary which will come through will be very strong. And we've seen pretty much no returns over the last year or so. Do you believe that there is a possibility that an earnings re-rating hope could reflect on the markets over the next maybe 3 months or so?
Yes, I definitely think so. That's exactly what I was alluding to just now. My sense is that the commentary from consumer discretionary plays will be reasonably robust. I think last 6 months have been very disappointing, especially with a very poor summer for air conditioner companies and some of the white goods. But if you zoom out and think about it, my sense is that easier credit availability, some improvement in investor or consumer sentiment because of the lower GST will probably drive sales and drive revenues, and that's what should reflect in the commentary. Some of the stocks have already done quite well. I mean, if you look at the auto stocks, they are up anywhere from like 20 to 30% over the last month, driven by the GST rate cut. But I think this theme is going to play out for a much wider range of consumer discretionary. At least that's what I'm hoping to see. Let's see how this turns out.
Okay, and Ashwini, what would be those pockets you would really focus on, which you believe will drive the earnings re-rating? Because that will likely be, it's obviously been a very rotational market over the last few years. So talk to us about what you believe will come into vogue, which is currently probably not in favor or not finding favor within the investor community.
I mean, it could be a whole bunch of things, right? It could be retailers, it could be, fashion companies, it could be, some of this will reflect obviously in the platform plays as well. Some of this will reflect into white goods. But like you said, it's an extremely rotational market. So you have to balance outlook with price performance. So if the stocks are already up 25, 30%, then you might want to look for something that hasn't done quite so well. And look at valuations and see where the upside scope is there. So it's more bottom up than top down, but it's across the range of discretionary consumption. I would say it could be apparel, it could be fashion, it could be jewelry, it could be white goods, small white goods, large appliances, the whole lot. I don't think I'm being very generalist here, but I'm saying that people were holding back from spending over the last 1 year, and some of this will get released at least for a quarter or two, hopefully for longer.
All right. Okay. Thank you so much. We'll leave it at that. Thanks so much for coming in and speaking with us,
Thank you.
Ashwini.